Welcome back to the Dividend Diplomat YouTube channel. You've got your boys here, Lanny and Bert. The Dividend Diplomat. Lanny, in today's video, we're going to talk about a stock that we both own. And I'm going to ask a simple question. Is it time to dump this loser before the bottom falls out, before the stock goes into a free fall? Or is there a chance this company has a turnaround story coming down the pipeline?
Lahoo's her guys, smash that subscribe button, give us a nice thumbs up. We're here to talk about a stock that had a wonderful ride up, but it's had almost a 30% ride down. It's almost like the 13 stories of hell here.
Oh, you want to talk about that? This one might have 25 stories of hell because that you're just talking about this last year, Lanny. You stretch it out. It's been even
yeah, you stretch out the last 5, right?
Yeah. All right. So this company is down 37% in the last 5 years, although they are up 9% in the last year. It was a very noisy year, nonetheless. Who are we talking about today, Lanny? Scott's Miracle-Gro, ticker symbol SMG. So let's pull the charts up here. Let's talk about Scott's Miracle-Gro. When we're talking about we missed our chance, what happened this last 52 weeks? Entered the year right where we started. We said it's up 8% in the last 52 weeks. That's because a year ago, $61 a share. It peaked, Lanny. It peaked at $93.47 at the beginning of November, right before they released earnings, which we are going to talk about in a moment. Now, they're trading back to
$28 price drop.
Yeah. And then when you take it over 5 years, they were the pandemic darling at the beginning of the year, Lanny. At the beginning of COVID, jumped up to $248.99 per share at its peak in 2020. $248.99. We really missed our chance to exit this company at 4x, but
almost like Paramount.
Yeah, almost like Paramount. But there's been a lot of noise in there. And part of what's been dragging them down, and we'll talk about a little bit more here, was their failed entrance into the marijuana sector. They gambled on the recreational marijuana, the distribution, the producing, and boy, oh boy, has that hurt the company, Lanny.
It has stung them pretty bad, and which is surprisingly considering they're based in Ohio, and Ohio has passed quite a lot of friendly legislation for the marijuana/cannabis industry here. So very interesting that they are struggling from entering the marijuana business. But Scott's Miracle-Gro, guys, talk about the roller coaster ride of the last 5 years. We are current shareholders. So let's really take a peel back at what they talked about during that fourth quarter earnings announcement.
Yeah, so they talked about how the revenue topped the estimates. Fourth quarter revenue was up 11%. Net sales were $415 million. Sales for the full year were flat, though, at $3.6 billion. They had a fourth quarter net loss of $131 million. Sorry, I apologize, everyone. I'm getting over a sickness, so that one comment there. So they're
adjusted net loss.
Yeah, adjusted net loss. Their adjusted diluted EPS was $2.31 down. Adjusted EBITDA negative $97.2 million, and interest expense was $33 million. So overall, it was a tough fourth quarter, even though they saw some sales growth.
Yeah, interest expense luckily is going down because that long-term debt, which stood at $2.8 billion in September of 2022, has come down to $2.1 billion in 2024. So just in 2 years alone, slashing 25% of your long-term debt is awesome. And I know that is their plan, is to use a lot of their free cash flow right now to knock out that debt.
Yeah, and that's been the big story here is they talk about when you look at the full year results. I said they had sales of $3.6 billion. They had positive adjusted net income at $132 million. They had free cash flow of $583 million. So over the last 2 years, they touted that they had over $1 billion in free cash flow, which was higher than their pre-COVID levels. So a lot of that poured into the debt repayment, like Lanny said, where you can see the debt drop $700 million over the last 2 years because they are getting so much free cash flow and pouring it right back into cleaning up that balance sheet and trying to get out from this Hawthorne mess that they find themselves in.
Yeah, I think anytime you could finally wipe your hands clean from the debt mess you might be in, I think opens up opportunities to use that free cash flow elsewhere, obviously for revenue generating business. If you actually look through here, on the full year summary that Bert will post up here, they perform very positively compared to the prior 12 months. Now, Hawthorne's not supposed to, and Bert, correct me if I'm wrong, exiting that, it's not supposed to impact 2020, the next fiscal year, as much as it did this year, right?
Yeah, that's right. They had 37% decline sales year over year, but that's because they were getting out of the distribution side of the business. They'll still be producing. They're still going to be in the business. They just failed at distribution and they're cutting their losses and moving on, which I respect that they can own it and move on and stop the bleeding from it. But they're still seeing a single digit sales decline for the sector for the next year. So it's declining less, which is going to be better for the long term financials of the company.
Yeah. So granted that they had adjusted EBITDA of about 510 million in the fiscal 2024, leads me to believe that they'll still have a very strong adjusted numbers come this fiscal year, because of they're getting to more of a normalized business, more back to like what Scott's does well, which is lawn care, house, residential, and commercial.
Back to the basics, kind of like what we've been talking about with our portfolios. We're trying to get back to basics. You see companies where this situation happens. They enter into new business ventures. They kind of feel invincible as they're going through it. For Scott, I probably would feel invincible too, seeing my share price jump up to $228 versus where it had historically been in the 60s. I'd feel like I could conquer it all. I'd feel like we were the best in a business to do something. I'd take a shot.
Ain't got on me.
Malibu. It's a great movie, by the way.
I was referencing actually Denzel from Training Day. You were referencing.
Yeah, that's right. All right, I was thinking much more Malibu's Most Wanted, not Training Day. I like my version of it better. We're the spoof of Training Day. How about that? All right, so let's run them through our screener, though. They're cleaning it up. Sales are down. Things are going to get a little bit better next year, maybe. But let's see where the metrics lie, because as we know, there's still potential for a stock to free fall. We've been around turnaround stories plenty on this channel, Lanny. A lot of people feel great about a turnaround story at the beginning of it. But at the end of it, a lot of companies are left holding, and investors left holding the bag because it didn't quite work out like you thought. So let's see how the metrics are looking to see if there are any signs in there that might be causing red flags that this turnaround story is going to be harder than we expect.
Trading at $66.61 stock price close of January 3rd, guys. Adjusted EPS expectations of $3.27, which is, we'll see. PE ratio of about 20x.
All right, so that's not a cheap stock by any stretch of the means. Payout ratio, your annual dividends $2.64. Payout ratio 80.73%. That is a high dividend payout ratio. That is for sure.
There is some risk here with the dividend. That is, we are telling the channel here, let us know what you think about Scott's Miracle-Gro dividend. Is there risk in the dividend? Should they pause so they can use that cash? But did they mention anything about what they plan to do with the dividend?
Nope, they did not. But they haven't increased it. So I'm assuming that streak is going to continue and that streak is going to persist. And that 5-year dividend growth rate is 3.16% because they had such large increases. Well, Lanny, the one thing is also going on here is Scott's Miracle-Gro, despite that their dividend is not growing right now. Their dividend yield is at least higher because that stock price has fallen so much over. Yeah, almost at the 4% mark, 3.96, well above that 5-year average of 3%.
Yep, you got a 1% margin on that 5-year average, guys. Keep in mind, this stock is still up despite just dropping another $27 in share price. The stock is still up from last year by about 9%, down though 37+% in the last 5 years. Market cap is a smaller company here in Ohio at $4 billion here. So, Bert, what are your plans with Scott's Miracle-Gro stock? Is this a stock to dump or a stock that you're going to hold and watch this story unfold?
See, I've been burned by so many turnaround stories here in the past. Been burned by so many. What's hard is, at least with this one, you can see debt's getting better. Free cash flow is strong. They are cutting out a business which they've needed to cut out. But when you look at the metrics, you see an 80% payout ratio. You see a high PE ratio. To me, there's risk that they could have a bad quarter, terrible first quarter that doesn't meet expectations. Hawthorne goes through even worse. And then the bottom falls out for this company. I don't think that's going to happen, but I think there's at least a 20 to 25% chance that could happen, which scares me. So for this one, what I'm going to say is I'm going to hold for now. If there happens to be a sudden jump up in the price where it gets above $80 per share, see ya, Scott's Miracle Grow. It's been fun. It's been real. But for right now, I think there's a better shot than not that you'll at least see some appreciation. But again, there is some downside risk to this one.
Yeah. All right. So Bert's thinking there's some appreciation. I do too. I think with them cutting out their debt, even using more of that cash flow already, hey, their fiscal year ended in September. So we're actually going to have a new quarter come out here within the next few weeks to see what the heck they've done in this first quarter of their fiscal year 25. And we'll see kind of how their adjusted results are actually looking like. So stay tuned over the next, 7 to 15 days probably.
Yeah. So everyone, let us know what you think of Scott's Miracle Grow. How do you feel about this turnaround story after seeing some of the metrics, seeing the trends of sales, and seeing the trends on the balance sheet? Let us know in that comment section.
Guys, if you haven't, definitely subscribe to this channel. Give us a nice thumbs up. Rock with us, the dividend investors here, guys, because we're trying to help you increase your passive income on that way to financial freedom, guys. Let's go.
And remember, you're either with us or you're against us, Jack.
That was Bert and Lanny from the Dividend Diplomats. Over and out.